how to consistently grow a small account. My name is Don Kaufman, and you are watching a TheoTrade presentation. It's a risk disclosure. We're not financial advisors nor a broker dealer. The reason I always throw this up here specifically is not just because it's a risk disclosure. Listen, I worked in the brokerage industry for over 15 years. I am beyond familiar with the brokerage industry. I've had actually a Series 3, a Series 4, a Series 7, my Series 24, my Series 66, which is a 63 plus a 65 combined. You name a license. I've actually had a couple of my Canadian licenses, my Australian license. I've pretty much had them all. What does that do? Absolutely nothing. It's just I couldn't wait to get out of the brokerage industry because you really, and you'll learn this along the way tonight, you can't really talk much about trading and educate properly within the confines of the brokerage world, which again I'll discuss here momentarily. It's a copyright disclaimer. This is ours. This is not yours. One thing I always mention up front too, if you ever need to get a hold of us, I'm right here. Okay, we use a common inbox. I don't put people off and like, oh, just email support. Listen, we use a common inbox. All you have to do is put Don in the heading, and that email will get to me. So just support at TheoTrade.com if you ever need to get a hold of me after today. That will absolutely do it. And by the way, we have an office in Scottsdale, Arizona. I have not been there since February. None of us have. But who needs an office these days? That's why I picked up and I'm like, that's it. I'm going to an island. gonna go spend a couple of months on an island, and eventually I might return. Although we've had that discussion a couple times here, it doesn't end well. They're like, why are we going back? There's nothing to go back to right now. Kids are not even in school back in Arizona where we're at right now. So we're gonna be here a little while. All right, let us forge forward here, onward and upward. All right, this is why you are here this evening. And by the way, listen, this is important to me, okay, that you're able to walk away with definitive knowledge. And if you're going to spend the next 90 minutes with us, we want to make sure that you understand these concepts, okay? How you can build a trade that's successful over many occurrences, okay? So you can kind of avoid what we kind of term like one-hit wonders that create really bad trading habits. How you can take minimal risk and produce consistent 55+ % returns surrounding high probability movements in any stock, ETF, or index. How you can actually take high probability directional positions, whether you're a long-term investor, swing trader, intraday trader. How you can use proper risk reward. In fact, we're going to talk about that here almost from the get-go when we talk about risk reward to grow a small account. By the way, every single position I talk about this evening can be done in a retirement account. All right. You know what? And I don't want to exclude anybody that says, hey, listen, I've got a little bit more capital. You have a large account. This is completely applicable to just that. Again, we're going to be talking about a strategy this evening, and we're also going to talk a little bit about trade logic. I think there's something in this presentation. By the way, this is a presentation that I have not done in an extremely long time and completely revamped. You guys are going to get a tremendous amount out of this evening. And of course, how you can trade without having to continually monitor the positions. So we're actually going to talk a little bit about good till canceled orders. This is not going to be sitting in front of a computer screen, glued to that computer screen. It's and that's important that we also kind of denote that. One other aspect here. There is an indicator that I use incessantly here at TheoTrade, and it's called expected move, or what I actually term auto expected move. And it really is the single most advanced indicator that I know of compiled. And it's an indicator that literally has changed the way we view markets. We will provide you this indicator. And I always mention this. We'll provide it to you right at the end of the webcast. And it's our gift to you, obviously, so you stay tuned to the end of the webcast. But it's also our gift to you because I discuss the auto expected move indicator, as I said, incessantly. I talk about it on some of the weekend videos that we do. For those of you that do tune in, who tunes in from time to time, some of the weekend videos and so forth that we do. If you do, tune into some of the weekend videos and so forth, you'll always hear me talk, expressly about things like expected move. And because I do that, we provide you this indicator. So, well, let you have it. And again, it's auto expected move, the ranges. And I'll explain a little bit about it, but the ranges are derived by the option chains, okay? And this can actually be used for some nice directionally biased trading. So I will provide, again, a link for that. But the way we have indicators for several different trading applications, this one happens to predominantly be the Thinkorswim trading application, and well, I'll explain that in a moment too. So a couple of housekeeping items. Listen, this is skill set. I'm going to fly through a lot of material, especially in the first like 15 minutes here. I'm going to go through a huge amount. Shut the door, turn off Skype, chat, get rid of Facebook. I don't even close it. Just get rid of it. Put your phone on silent mode. Kick out the kids. Definitely kick out the grandkids. That's the best thing about grandkids, right? You can hand them back. But the dog can stay. All I'm saying is, listen, you took the time to be here. This is important. Okay, focus. I mean, really focus on being here. So this is a little bit about me for kind of a brief introduction. I watched order flow for 15 years, and it really is in very large part, okay, of why I'm here. And then you're like, well, I don't necessarily get that. When I say in very large part of why I'm here, okay, so I started trading, and I'll give you a little background on me. I started trading in the late 90s, but I had family. I grew up around it. People always ask me all the time, how'd you get involved in this business? I kind of want to be in it. And I'm a little bit unique in that respect. Okay. And when I say I had family in trading, I had family that started trading in the 1970s. I had an uncle that was a market maker, and he built a trading firm. The firm was called O'Connor and Associates. He had one seat on the CBOE, the Chicago Board Options Exchange. He built it to over 500 seats around the world within 7 years. He sold the firm in the early 90s to the Swiss bank. It was a multi-billion-dollar deal. In the early 90s, that was a lot of capital. And, you grow up around that. When I say grow up around it, listen, if you had, an uncle that was a multi-billionaire, obviously you have an interest in it. And by the way, nobody has an uncle that just hands them capital and so forth. But he did get me interested in it. And right out of college, literally 3 weeks out of school, I went to Chicago, and phoned in a little bit of a favor and started trading there. About 2 years after I was in Chicago, I actually got an offer, literally out of the blue. It was like walking off, and out of the Chicago Board Options Exchange building. A couple of guys that I knew said, "Hey, we're leaving the floor, and we're going to start a brokerage firm. It's called Thinkorswim." And I'm like, well, that's the dumbest name I've ever heard. And I literally said, that's the dumbest name I've ever heard, but I like you guys, and I'm going. So I joined Thinkorswim right in the onset. Literally, when you talk about like startup, okay, I mean, we're talking about like cardboard boxes without, real monitors when I joined Thinkorswim. And I built their entire education division. I also helped build a lot of the functionality on the Thinkorswim platform, which, do I use Thinkorswim? Yes, but I also am totally familiar with Tastyworks and most of TD Ameritrade. So I went on to take Thinkorswim public in 2007. And I was on the executive team at that point. Anyway, from 2010, 2015, I ran the education division of Thinkorswim. And obviously then, it was TD Ameritrade. And one of the things we got access to, and it's something that I talk quite a bit about now, but we got to see everybody's order flow. And we got to see what the entire, like world of retail traders did, and we studied it. And the frustrating thing with that is that, we couldn't actually use that information while at TD Ameritrade, but we use it now. A bunch of us actually left TD Ameritrade and Thinkorswim and launched, obviously, TheoTrade, and that's kind of what brings me to you this evening. So I do media appearances from time to time. I actually did TD Ameritrade TV literally yesterday. This is actually the last time that I was in studio. The last time I was in Chicago was all the way back in August of last year. I will do CNBC from time to time, and continue to do some media appearances, even remotely here from St. Croix, even on a generator. Works out just fine. And again, if I cut back out again, have no fear. It'll be 3 minutes, and I can hop back in here and fix it. So there's a little bit of volatility in this marketplace. And I just want to address it right up front as we start to get into and bridge our way right now into kind of the learning side of this, if you will. Enough of the introductions. We're ready to go. Anyway, with that, okay. Hey, my generator just turned off. This is a positive sign, people. Okay, we're back, baby. So I love it. Okay, you gotta you gotta love the fact that again I'm running on a generator here, and I feel like I'm pedaling or like a chicken in a wheel. Volatility has a lot of people concerned, and it really shouldn't. Okay, like this is it. Like this is the time that traders, not necessarily investors, okay, but this is the time that traders, they live for. And I don't say that to get you jazzed up about this. I'm going to show you, right? I'm going to show you my account. By the way, I hope you guys don't mind. I have my Thinkorswim account open. I also have my Tastyworks account open in the backdrop. And people, listen, I do what I kind of call full disclosure here. I'll show you every account. This is an IRA. Okay, I'll show you this is the P&L today. Okay, so I'm up, $2,300 today in this particular account. This is a secondary account. This is a portfolio margin account. This one was up about $1,600 today. I will show you every single detail. There's a lot of short positions in here. I will show you every single detail of every single account always, right? I don't hide anything, P&L wise. It's all there. And I'm also going to show you the account value this year and how it's kind of matured and so forth. And again, when I show you like P&L, this ain't paper trading, people. Okay, these are my accounts. I can aggregate the accounts. This is again, and this is only two of the accounts. I can bring up Tasty as well. One of these is an IRA. Again, the other one is a portfolio margin account. So again, full Monty over here. Anyway, with that, the thing that I stress to you again is that appreciate the volatility, embrace it. And that's the one thing. It's really tough for people to grab onto that. There's like a nervous energy almost in the marketplace right now. And I stress to you again, volatility is good. With that being said, risk, your money's on the line. Take it seriously because how you handle your risk is directly correlated to success in the markets. And I think a lot of people realize this, just too much risk, you're going to panic, okay? And you're going to close positions continuously at just the absolute worst times. And this is something that, this is actually a slide, by the way, I have used for just years and years and years. Okay. Again, I kind of bring this one up. Thing is, people, you're consistent with your panic. And the thing that I always bring up over here, by the way, this is somebody puking up their position, but I've literally looked at hundreds of thousands of accounts. That's what we did at TD Ameritrade. We studied to build better education. We went back and studied people's accounts. And I've seen what works and what doesn't. And what doesn't gets repeated over and over again. And that's actually kind of the origin of this particular slide, right? So here is what works, okay? First and foremost, what works for what we term retail traders, okay? You're not a market maker. I'm not making markets anymore. None of us are making markets anymore. I think you got to get that out of your head. You got to follow a system that has been sourced from hundreds of thousands of people like you. Like, again, what works in the retail side of the business? You got to cut losses and use a repeatable strategy to obtain incremental returns, okay? Hitting home runs. And there are many, many, many strategies that, we can use to hit some home runs. But one of the key points over here is incremental returns. And the third point over here, it's successful trading strategies that exemplify the principles of building a trade. And that's exactly where we're about to head right now, is into the principles of building a trade. So this is something I'll bring up quite often here at TheoTrade. So if you've ever seen this before, that's great, because I'm going to reinforce it here just a little bit. But principles of building a trade: trade logic, capital allocation, directional bias. Okay. For those of you that are live with me right now, do those mean anything to you at all? Okay. And I don't ask that facetiously. Like, what do those mean to you? I come on here, I say, these are the principles of building a trade. This is something that was instilled in me very, very early on in this business, is that, and I'll kind of clarify here before I actually dig deeper into this, but they basically said, listen, kid, you're not going to go out there and risk, okay, tens of millions of dollars because you think that we're going up or you think we're going down. Anybody? Okay. I mean, think about that one for a second. Does that sound reasonable to any of you? Reasonable? Maybe? Okay. Dead silence here, huh? So I always ask these kind of questions because you start thinking about like directional bias. Listen, everything that's done, and I'm not here to pick on charts. I'm not here to pick on like CNBC, but everything that's done like CNBC or any of the business channels, all they do is talk about, well, I think this is going up and I think this is going down, and they always have somebody an opposing opinion. People are not out there risking hundreds of millions or billions of dollars on that. Trading firms don't do it. They have trade logic, they have allocation, then they have directional bias. It's tertiary. Listen, trade logic. You have to place strategy and trade logic first. Listen, the vast amount of people involved in markets, they're infatuated, literally infatuated with market direction. They attempt to predict. Let's just, people are like, no, I use a MACD, a Fibonacci, a Bollinger Band. Yeah, okay, so we're attempting to predict the next move, okay, that a stock is going to make. Listen, the right strategy coupled with established entry and exit criteria, you don't necessarily have to be right in picking direction in a stock or the markets in order to be profitable. That's what we call logic. And I'm going to hammer logic into you here momentarily, right? And again, I bring up trade logic. Like the way to think of trade logic is very simple. Like I hate to use this, this terminology, but okay, it's how you play the game. Think about this. I'm going to say how you play. It's how you play the game. If you walk into some game and you don't have any gaming theory, what? You're dead. Okay, you're absolutely dead. You don't even realize it, and you're behind. You have to have some type of game theory. Most people just walk into the markets. They go, I think this crap is going to work, and unfortunately, it doesn't. The other big aspect here, and this one's big, how and where you allocate capital should strongly be considered as a viable portion of your trading methodology. I'm big in capital allocation. Why? Doesn't matter if you're right. It doesn't matter if you're right, because I will put money on it. How many people here this evening, and again, I like to get involved in the people that are live here, but how many people this evening, okay, have, okay, been in a position, and be honest with me, okay? Come on, people, admitting it's the first step tonight. How many people have been in a position, right? You got stopped out, you ducked out, okay? You did something to get out, only to see the position, okay, mature your direction thereafter. Anybody? Come on. Okay. Everybody's like, I did that. I like that one answer. There's actually a great answer in there. Somebody said, not since today. So we're going to try to overcome a little bit of that. And again, I do stress a lot about capital allocation because I make that argument all day long, right? That capital allocation is more important than being right. And you go, well, how could that be? Who the hell cares if you're going to be right? You're never going to be able to hold the position long enough. And I don't want to be so like, hostile, but it doesn't matter. You'll never be able to hold a position long enough if you're too big. So allocation has to be more important than directional bias. Interesting. Lastly, we have directional bias. It's the dog. Okay. I'm not anti-charts. I'm not an anti-chartite. Okay. But where you think a stock might go doesn't always mean the markets are going to agree with your sentiments. Like it's, people are like, I know it's going up. This is the only business in the world. It really is that I know of. The only business that the longer you are in it, you realize you're like, yeah, I have no idea where that stock is going to go. Okay. It doesn't necessarily matter. Being right directionally, it can't define you as an investor. It can't define you as a trader because you might not be right often enough. You got to have some duration. Okay. Now, this is a phrase you'll hear a lot, and this is a phrase you'll hear in the professional trading community, and we call it duration over direction. And this is something I absolutely have adapted from early years of my trading career because the guys used to always say, like, duration over direction. How and where you allocate capital can define not only losses, but it can be the defining factor in your overall success or failure in the markets. Our war cry is duration over direction. And what that means is you need to be able and you need to be capable of sustaining trades long enough to be profitable. Does that make sense to everybody? Okay. All right. You want to be right or you want to be happy? That's a famous phrase. Okay, my wife says that crap a lot too. And I'm like, tonight I'm going to fight. I'd rather be right. Okay, I've definitely not applied this to my marriage, but the logic, it really does work beautifully in trade. Okay, and it's an important concept. I'll always take the stance that you don't necessarily have to be right with directional bias to be able to make money in this marketplace. Why, you ask? Experience in watching order flow for decades. Just decades of order flow has taught us invaluable lessons. Okay. And this is where I say again, have you ever been stopped out of a trade or bailed out of a position only to see the markets turn around shortly thereafter? Okay. Everybody does that. And what I'm going to do, okay, first and foremost here this evening. And again, this is one of the more important aspects I talk about. We're going to talk about core strategy and trade logic. So I'm going to introduce to you one real world strategy that you can start using tomorrow. It's very, very risk averse. And I'm going to give you a lot of nuts and bolts behind that. Okay. But first, risk versus reward. Now, we have to get through an understanding. And I said, this can be a little bit intense tonight. This is the intense part, the risk versus reward. Pay very careful attention, okay, to the next 10 to 15 minutes here, because this is one of these critical examples that'll really hammer home, if you will, the entire trade logic, idea. And listen, when we first learn about markets, I guess the best way to do this is just to jump in and explain it. When we first learn about the markets and trading, we often are exposed to these ideas. And one of the ideas that comes up, okay, has everything to do with what we term risk versus reward, right? And when you first get involved in this business, what does somebody say? Risk 1 to make 2. And that's a common strategic entrance to the marketplace. But you ever looked at the probability of this? Anybody? Okay. Anybody? Has anybody ever looked at the probability of like risk 1 to be able to make 2, risk 1 to make 2? I told you, man, you should risk 1 to be able to make 2. But nobody seems to question it. Nobody ever took this idea and ran the mathematics behind it of how it would impact, okay, especially newer traders. Nobody seems to look at this stuff, right? Let me get to it. Let's debunk it. We're going to debunk risk versus reward. So I'm going to make this actually easy. I'm going to go out there and say we actually buy a stock. So stock, every fictitious stock for me is called stock. And stock is trading, okay, in this case, at $46. So you're going to go out and you're going to buy it. Let's say that we actually do buy the physical stock, because stock is a company. And then you turn around and set a stop. Stop. Okay. And my stop is right at, and that's a hard stop, is $45. I'm making it easy. It's at $45. And then I'm actually going to put a target. I'm going to put a target on my back. And that target's going to be at 48. Everybody with me? So what are we really doing here? Well, if we go down, we lose 1. If we go up, we make 2. It's the prototypical risk 1 to be able to make 2 scenario. That's it. Okay. I just want you to understand that's what we're doing right now. Okay. That is what we're doing. All right. So let's get to probabilities though when you're trading. And let's lay that one out again, because everybody kind of got the gist of it. So you went out there again and you bought Mr. Stock, and you bought Mr. Stock over here at $46. You actually set a stop order, okay? Stop, okay, at 45. And then, of course, again, your target is at 48. So let me ask this question. What's more likely? Okay, what's more likely? Anybody? Anybody? Okay. What's more likely? Going down to 45 or going up to 48? Now, you have to step back from the market for a second to be able to answer this question, because you are getting led down a very dark path right now. And the dark path is very simply, people are going to look at this and they go, I'm going to use my MACD, my Fibonacci, my Bollinger Band. My stochastic will tell me where it's going. Okay. Did the Elliott wave people make you do it? Did they? Did the Elliott wave people tell you to do that? Anyway, in a normal volatility fluctuation. Okay. So volatility happens. I like that phrase. Volatility happens. That's my t-shirt. I'm trademarking it. Anyway, in a normal volatility fluctuation, you do realize that there's an incredibly high probability of touching down to 45 before hitting 48. Period. The end. There's a much higher probability of going down $1 before going up 2. Doesn't matter what you think, okay? And maybe your MACD and your Fibonacci and your Bollinger Band will work some of the time. But the reality is, if you were to do the exact same thing again and again and again and again, okay, what's going to happen? What is going to happen over there, right? You have a very high probability of getting stopped out versus hitting the target price. And this doesn't have to be like an intraday trade. This could be a multi-day trade. All I'm trying to express to you here is risk one to make two, which is universal. It could be an intraday, it could be a multi-day, it could be for weeks, right? So where are we going with this? I'll tell you exactly where we're going. Options are probabilities. You ever looked at or even traded the options market? Okay. And maybe you didn't look at the options market. Maybe you have. I'm not here, okay, right now to shove options down your throat. But I am here to tell you that options are based in probabilities. And options can actually help you in determining the viability and practicality of a given trading strategy. How? Let's take a look at what the probabilities are in the aforementioned risk one to be able to make two trading setup. Okay, I'm going to show you guys a slide here in a moment. All right. Now, when I show you this slide, I don't want anybody getting freaked out because the next slide is a little bit what I would term hardcore. We're going to go from, we're in Mickey Mouse land right now, and we're about to get a little bit more serious. We're about to jump to some pretty serious stuff. Here we go. Probabilities exposed. Now, hold on there. Bear with me here for a second. Remember, this is not a fictitious example. You think I just pulled a $46 stock, okay, out of the woodwork? This is a stock. It's called Intel. Anybody ever heard of it before? It's Intel. I took the screenshot a little bit earlier in the day. Intel actually closed off this price, but it's okay. Basically, I chose Intel not because it was Intel. I chose Intel because it was trading almost right at 46. So Intel is right at 46, okay? And what I wanted to know is what the probability of touching. Now, some of you don't know what probability of touching is. Every major trading application now has probability of touching. Tastyworks has it. E-Trade has it. Thinkorswim has it. Okay. Interactive Brokers has it. They all have the probability of touching. Very few people use it. They don't really know how to use it. Okay. I actually worked for a long time, obviously, at Thinkorswim, and I helped, okay, in building a lot of the calculations, in terms of like probability of touching, expected move, probability of expiring in the money, out of the money, theoretical pricing calculator, worked on all of it. So here's this probability of touching calculation. And the probability of touching the 45 level, okay? So what I wanted to know is, we bought the stock here at 46, but what's the chance of like what? Stop happening? And the answer is about 74%. That's not immediately, it's in the next 17 days, but it says anytime in the next 17 days. Dun, da, 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 it's about a 74% chance of getting stopped out. But then, so it's a pretty high probability of getting stopped out. But then what's the probability of hitting my target? What was my target? 48. 48. What's the probability of getting there? 42%. Oh yeah, sign me up for that. Are we okay with this example? Everybody okay with this example? Because people look at this for the first time and, again, the example that I brought up was to lead you down, I would say, a very dark path. But you look at this and you're like, oh man, whatever. I got a MACD, a Fibonacci, a Bollinger Band, but you can't overcome, okay, probabilities. If you do trades sequentially, you do a trade, you do a trade, you do a trade, you do a trade. If you're going to last in this business, you're going to end up doing 50 or 100 trades. What do you think is going to happen? You do 50 or 100 trades. I guarantee you one thing about this business. It is unrelenting and the mathematics always win out. Everybody in the business knows that. Unrelenting and the mathematics always win out. Listen, in the aforementioned Intel example, the probability of hitting the stop was 74%. The probability of hitting the target price was 48, it was 42%. I should say the probability of hitting the target price of 48 was 42%. It's a low probability of disaster. And that's what it comes down to. It's just I'll ask the question now too, like how many people have ever truly looked at this example before from a probability standpoint. So few people ever look at this stuff from the standpoint of probability. Like if you ever looked at probability before and your probability said 74% chance of getting stopped out, let me ask you something. Would you have done the trade in the first place? Okay. All right. And I'm also going to ask this, so just to reinforce this. You guys give me a stock and give me a price. Okay. And I'll give you the probability over here. Anybody? I'll give you the exact probability of it. You know, you give me a price, you give me a time frame, all right, and you can actually calculate probability in here. Of course, you know, the first thing somebody actually mentions in here is bring up Apple. Okay. There. We'll bring up Apple, and you can see I've got positions inside of Apple, but I'll just go out, okay, some 17 days, and there's probability of touching. And the interesting irony is somebody just said the 117 level, okay, inside of Apple. There you go. There's a 76% chance, okay, of touching that level. So if you put a stop there at the 117, you have a 76% chance of getting stopped out between now and 17 days from now. Welcome to the party, okay? This is one of the first things they teach traders. Oh, Zoom. Oh, Zoom is ridiculous. And BABA is ridiculous too. Those are really, really high volatility. The higher the volatility, the higher the probability of getting ripped apart in there. Somebody actually mentioned plug. Okay. Oh, that's brutal. Okay. Just brutal. By the way, the spiders, somebody also mentioned the spiders in here. The spiders are the most liquid product pretty much, you know, around. And somebody said, what about between today and tomorrow? Okay. You have a 52% chance of hitting the 358. Let's get to work. Positioning your portfolio with the right trade logic. So now let's take what we've learned, okay? Because we've learned that going out there and setting stop orders is, and listen, I'm not here to make you like anti-stop order. That's not the reasoning behind it, okay? The reasoning behind me going through here and talking about things like stop orders, okay? Quite frankly, I'll just give it to you as straight as I possibly can. I'm talking about it because every pitfall that people have ever fallen into, okay, I have seen. Listen, the buck stops here. You know, I studied order flow for 15 years of my career. If you say like, hey man, I used to do iron condors, I can tell you everything you've ever done wrong in an iron condor. I can tell you everything you've ever done wrong in using stop orders. If you trade futures contracts, we know everything. We studied order flow. When I say I studied order flow, I didn't sit down there and like look at your account, okay? We had an entire division of TD Ameritrade that did nothing, okay, but break down what retail clients did. I mean, these guys were so hardcore. I mean, it's like, you know, a group pretty much of actuaries that were just locked in a room, okay? They actually called that group the nerdery. That's what they called them. And the nerdery is what ran big data on your trades. It was my job to ask them questions. You know, how many people made money in doing a covered call? How many people made money doing this? Who lost money because they used stop orders? If a client used a stop order more than twice in a month, would they make money or lose money over time? And you know, you start asking questions like that, and the answers you get back are absolutely horrifying. Just horrifying. And it's important that you guys understand that. So now what we're going to do is we're going to position, okay, you most effectively, but without exposing you to drastic risks or a low probability. Okay, here's some of the key points that we want to hit. We need a strategy, okay, that does what? And when I say we need a strategy, first of all, okay, we don't need no stinking stop orders, because the stop order is going to give you a high probability of being stopped out. Number two, I got to define my risk. I want to know exactly what I'm going to risk. Provides a high probability of success, limits capital exposure. How do you limit capital exposure? By number 5, never needing to buy or sell the stock. We can actually fine tune your capital exposure down to the dollar here. These are the critical aspects. And again, that's what I want to achieve with a strategy. Enter the in-out spread. So in-out spreads are designed to limit exposure. In fact, you know, I'm going to even go a step further here. Yes, in-out spreads are option trades. In-out spreads are designed expressly, okay, to mitigate, which means to reduce all the risks, okay, that screw people up in trading options. All the things, all the misnomers about options, the in-out spread is designed expressly to circumnavigate almost all of the risk of options, but they're options trades. Don't fear the options. The option spread is going to allow us to limit risk without the use of stop orders, but it's still going to provide us a considerable upside potential, and it's going to give us a relatively high, probability. Now I'm going to explain a little bit about an in-out spread. And this is the point where, again, if you're brand new to options, who here is brand new to options? Again, we're going to make these, they ain't rhetorical questions, people. Okay. If you're brand new to options, fine. Just grasp, some of the concepts. Okay. Just, some of the concepts, right? And if you have some experience in options, sit back, bear a little bit more of the pain, because we're going to get into stuff that you don't know either. Okay. So here, in-out spreads explained. So I'm going to start with just a kind of a brief example. And again, I'm not going to go, gloriously down a hole of never-ending options over here. Listen, this happens to be a stock. And listen, I could say this is going to be a, you know what? Let's make it a $200 stock. And of course, every stock in my book is stock, and it's trading right at 200. Now, do I own the stock? No. Do I want to own the stock? No. How come I don't want to own the stock? Because I just don't want that kind of capital exposure. Every stock these days is $200, okay? Unless, of course, it's, Google, in which case, so what's a couple thousand here, a couple thousand there between Google and Amazon, okay? Maybe throw a little Tesla in there for $500. Anyway, you have a stock, and the stock is trading literally at $200 on the button. I'm not going to trade the stock. I'm going to go out there, and I am going to put on, what is known as an in-out spread. And I'm going to make this example super, super easy, okay? I'm going to go out there, and I am going to buy, and in this case, a 199 call. I'm going to buy a 199 call, and that 199 call is going to be trading for $3. Stop right there. People are already freaking out, okay? And that thing is going to be good for a period. Let's put it up here of let's make it 1 month. It's going to be good for a full month, okay? This is not that volatile to stock, but whatever. We're going to buy a 199 call. What's the 199 call give us the right to do? For those of you that are brand new, just brand new, okay, that have never traded an option. Listen, here's how options work. A 199 call gives me the right to buy the stock at 199. Everybody else in the world has to pay 200, but you get to pay 199, but you got to pay $3 for the right to buy it at 199. The 199 call gives the right to buy the stock at 199, but I don't really want to buy the stock at 199. I just want the right to buy the stock at 199, and it's only good for a month. So if the stock goes from 200 and goes all the way down to 190, I lose my $3 and it's all over. It's all over. That's it. That's what an option is. So let's put that down below over here. He's going to go out and he's going to buy, a 199 call. And it's going to be trading for $3. Now, here's the wild part. Now I am simultaneously, that's at the same time, going to be, selling a 201 call. And that one, just bear with me for a second, is going to be trading for $2. So I'm going to buy something, I'm going to sell something. I'm going to buy something, I'm going to sell something. And let's bring the sell back down here too. Sell the 201 call, and it's going to be trading for $2. Okay. Now, if I buy the 199 call, that gives me the right to buy the stock at 199. Everybody okay with that? Okay. But I don't really want to buy the stock. But then I'm selling the 201 call. By the way, whenever I bring up the sale of the 201 call, they go, excuse me, sir. You never owned the 201 call. How can you sell something you've never, ever owned? I'm selling myself into an obligation. For every option that you trade, there is a buyer. And for every option that you trade, there is a seller. In this case, I am a buyer, which gives me the right to buy the stock at 199. In the other case, I'm actually a seller of the 201 call. If I sell the 201 call, I'm giving somebody else the right to take my stock from me at 201. You go, but Don, excuse me, Don, You don't own any stock. You're like, you're right, I don't. But I have the 199 call, which gives me the right to buy the stock at 199. And if I had the right to buy the stock at 199, I could buy the stock at 199, give it to somebody at 201. And what's the most you can make on this spread? This is higher mathematics over here. What's the most you can make on a $2 wide spread? The most you can possibly make in this spread is $2. Okay, the most you can possibly make in this spread is $2. Now hold on there, cowboy. What do I have to pay for it? So if I buy this for $3, I sell this for $2. Okay, I have to pay $1 for this trade. So I pay $1 for the trade. What's the most I can possibly make in it? Well, if I buy the stock at 199 and unload the stock to somebody else at 201, the most I can possibly make in this trade is $2, of which I just paid $1 up front. Okay, I just paid $1 up front. We okay so far? Okay, because the first entrance to this, I don't want to totally blow your mind. Now, where do I want the stock to go? Stock's trading right here. I want the stock to go up. How far up? Anything over 201 and I'm gold, Jerry, gold. But I want the stock to go up. What happens if the stock doesn't go up? Oh, it goes down. What can I lose if it goes down? I only paid $1 for the thing. So if it goes down, what can I lose? $1. Okay. Will I be crying to my Cheerios? Probably not. But stocks can go down. Okay. All I want you to understand at this point, careful. All I want you to understand at this point, okay, is the logic. Buy this, sell this. Buy this, sell this. Why? Because it limits me to $1 of risk. Okay. Are we at that point right now? Okay. Because one point that I really, really want to drive home here, I'm going to save it. I'm going to save it just for a minute because some people already get it. Now we're going to go back to the Intel example. Let's continue our Intel example. However, okay, use in-out spreads rather than stock and stop orders. Because I got through the initial example, now I'm going to beat you up. Now I'm going to beat you up really, really, really good. All right. And the reason I'm going to beat you up a little bit on this one is simply in respect to the fact that, well, this is kind of the important side of, these examples. Okay. Somebody actually already sees it in here, which I have to tell you. Okay. Somebody came in here and I do have to say, I am impressed. Okay. I'm impressed that they actually see what we're trying to accomplish already, even though they haven't seen the full Monty just yet. And that's this. Okay. This is an Intel in-out spread example. By the way, the numbers that you're seeing on the screen here, this isn't just an example, a fictitious example. It's a real trade. The trade is still available. I mean, it's there. Okay. Intel is trading right at $46. This is exactly what we were doing earlier, right? So Intel is trading right at $46. Okay, we got that. Well, instead of going out and buying the stock, I'm going to buy a 45 call. The 45 call is trading for basically 210. Then I'm simultaneously going to be selling the 47 call against it, which is trading for, in this case, okay, that's supposed to be a 110. Okay, I'll fix it. Okay, that says 110. I swear to you it does. Okay, my slide's good. That is a dollar, okay, 10, which you'll see here on the screen here. Oh, there it is, momentarily. Okay, so I'm buying the 45 call for 210, then I'm selling a 47 call for a $1.10 credit. What's it costing? $1 debit. Okay, it's $1 debit. Now stop right there. Stop right there. Okay, this is a bullish strategy. It's good for a period, let's just say in this case, of a month. Let me ask you something. Could I do this for 2 months? Could I do this for 3 months? Could I do it even 4 months out? Okay. Could I do it further out in time? I could. I absolutely could. So why am I taking you through this so slowly? Because most people, they don't get exactly what we're trying to do just yet. In this spread, okay, the max risk equals $1. What's the max profit? Okay. Max profit is $1. Why would I ever want to do this? Why would I ever want to do this? I am literally going out, okay? And I want to detail this because it's one of the most important concepts that I can drive home to you tonight. I'm risking 1 to be able to make 1. Risk one to make one, risk one to make one, risk one to make one. Why would you ever want to risk one to make one? I'll give you a great example. Because the probability of making a dollar is extraordinarily high versus losing the dollar. Okay, this is what trade logic is about. Okay, if you can risk a buck to make a buck, but there's a higher probability of making the dollar, okay, would you do it? Let me explain that. Okay, you go out and you put this strategy on. Like, let's say you have it on. You bought the 45 call, you simultaneously sold the 47 call, you're in this thing for $1 debit. Now, the second you put the trade on, the stock does nothing but goes where? Down. How do you get a stock to go down? Buy it! Anyway, you go over here and the stock goes down. It goes all the way down to $41. Okay, now you really are crying in your Cheerios like, oh man, I'm going to lose my dollar. It sucks. I'm going to lose my dollar. Guess what? That happened in the period of 3 days. Right? But this trade is good for, let's make it 2 months. 2 months, 2 months, 2 months. 2 months is okay. So that happened in a period of 3 days. The thing sold off like $5. It was a bad couple of trading days. Anyway, meanwhile, a couple other days passed by, yada, yada, yada. Eventually, we end up at like 48. Gold, you're out. Plus $1. There's a higher probability. Why? Because you never get stopped out. The trade makes you impervious to risk. That's the thing that people don't get about spreads. Okay, what's your risk? $1. Are you fully prepared to lose $1? You're like, I am, sir. I don't like the idea, but I am fully prepared to lose $1. Okay, so if you're fully prepared to lose $1, let fly. Let the stock back off. There's still an incredibly high probability that at some point in the next 2 months that we trade above 47. Doesn't always happen. Sometimes people, you're going to lose your dollar. You okay with that? Okay, put on your big boy pants because you're going to lose $1 sometimes. There's an incredibly high probability, okay, of recovery on this particular strategy. Or, quite frankly, maybe you're just right off the bat. Some people are like, my MACDs and Fibonacci's worked. Okay, great. Stock goes to 48, you're out profitably. Stock goes to 49, you're out profitably. Stock goes to 50, you just gold. Okay, stock goes to 55, you should have been out a long time ago. The most you can possibly make in the strategy is $1. Okay, but you have a much higher probability of capturing that dollar using a defined risk strategy. All right, think about that. Think about that for a second. And by the way, for those of you that understand a little bit about options, okay, one contract, okay, one spread is the equivalency of $100. I could do this 10 spreads and make it the equivalency of $1,000. I could do this 100 spreads and make this $10,000. You name it. But this is a strategy that you can absolutely unequivocally trade for as little as $100 at risk. Okay, and that's okay. That's why I said, well, let me ask you, why aren't you doing this? Okay, because this is why you need, and this is why you want to use in-out spreads. Overcomes the high probability of being stopped out. There's no stop order in here. Of course, I'm not going to use a stop order. Defines your risk, limits capital exposure. You never need to buy or sell the stock. You never need to buy or sell the stock and provides a high probability of success. You can initially be wrong. Okay, I'm wrong all the time. Ask my wife. Okay, in terms of price movement and still come out ahead. Like seriously, you're going to be wrong. If you're going to be wrong, do it right. I'm telling you right now, you need this in your life. You need this in your life. And now I'm going to show you, okay, when I say it's a real example, it is a real example. It's not an example. It's a trade I just took a screenshot of, right? Stock's trading roughly at 46, okay? You basically buy the 45 call, you sell the 47 call against it. The max risk is $1 debit. $1 debit. So what? It's going to go against you. It's going to go out, I got the prices spot on over here. You're going to laugh. You're going to cry. This is the stuff you need to do. Now, I actually put this example in here for 37 days, but I'm going to blow your mind for a second. People that know options always say this, okay? People, by the way, margin account, you need an IRA. This is an IRA, okay? You can do this in a multitude of different accounts. So don't, worry about the accounts and so forth. We can help you with all of that as well. There is one thing you have to have, $2,000 in your account, okay? You have to have $2,000 in your account. But I did this trade for 37 days out. Could I have gone further out in time? Okay. I mean, I could do this in the spiders, right? Could I do it in the spiders instead of being bullish? That was a bullish trade. Maybe I could do a bearish trade in the spiders, right? How fast can we actually pull up a bearish trade in the spiders? Boom, done. This one's what? 2 months out. Why do 2 months? I can actually roll this thing all the way out. Look at this. The further you go out in time, this is April. The further I go out in time, the cheaper the trade is. So everybody always says options cost more the further you go out in time. No, they don't, because the in-out spread actually offsets offsets all the time value in there. It offsets the time component. Okay. I mean, this is a strategy that, I don't want you guys to think like, he just came up with that. Okay. Of course not. This is 15 years of studying order flow and knowing, okay, what destroys retail clients. That's the in-out spread. Okay. The in-out spread circumnavigates all the things that mess people up in options. It overcomes volatility. Okay. There's no time decay in here because the further you go out, it's actually going to cost you less in time. It reduces the risk. There's no exercise or assignment risk because we're going to get you out before. It just goes on and on. Listen, in-out spreads give you the power to trade massive stocks and index products, pennies at risk. Okay. Here's some high probability trade right here. This next one is the IWM. How many people here know the IWM? It's the Russell. Okay. This one's the Russell. And I put this one together because I thought it was an interesting trade. You know what? I wouldn't call the IWM massive, but it's almost a $200 product. And in this case, okay, this is a bearish trade. Okay. This is a bearish trade. Why do I want to be bearish in the Russell right now? Why do I want to be bearish? And take a look at the max risk. It's 97 cents. So if I went out and did one contract, and by the way, this trade, okay, when I say this trade is, all this, that, this trade is there. This is 44 days out. When I say it's there, okay, I only took the screenshot, hour ago. I just figured it'd be easier for you guys if I took a screenshot, but here, I'll actually pop the trade directly into the platform. And again, just so you're aware, okay, that's the 8078, the 8078. So do the 8078. Look, it's trading for 96 cents. That's 37 days out. Why not bounce this trade a little further out in time, all the way to March, trading for 93 cents. Now that's the March trade. Look, okay, we can go all the way out to March, 122 days out. We can go out to February, okay, you name it. Again, more time, pay less. Not a half bad idea. But the question is in here, listen, I'm trading a $178 product. It's a bearish strategy. So you can get bullish, you can get bearish. Why short the Russell? This is the auto expected move. This is exactly why we share this indicator here tonight. And again, when I say we share this indicator, okay, this particular indicator is the reasoning behind me getting short because we exploded to the upside a multitude of times. We look for reversion back down. Okay, and that's one of the many things that this particular indicator. Now, you guys give me a stock. You give me a stock and say, I want to get long, I want to get short. Just tell me what stock. I don't care. Okay, and again, is this going to stop? Sometimes you're going to lose a buck in here, and that's okay. I'm telling you right now, you can lose $1 here, you can lose $1 there. It's okay to take $1 hit from time to time. Sequentially speaking, okay, I mean, you can be right probably, half the time here. Easily in the marketplace. All right. So, I love it. Somebody just came up with one of the ones I've got a position on, which is NVIDIA. Okay. Long or short? Well, I'm going to make that decision for you. Okay. Hope you don't mind. I'm about to make a very strategic decision here. We're going to say we're going to get short NVIDIA. NVIDIA did break down, but I will only do this example on the short side. Now, I can go 31 days out and go 37 days out. I'm actually going to select a little further out in time over here because with NVIDIA, I feel the urge to be both right and wrong. I can come in here and I can actually build a spread. Look, this is a 250 wide spread for $1.33. Or let's get crazy. I could do $1.40. Okay. Or sorry, the 540 to the 535s. This one's about 260. This is a $5 wide spread for trading just about 260. Now, granted, the market's closed right now. This thing will probably trade at a much better price when the marketplace is open. Look, I can actually buy the December 18th, okay, for 235. It's a pretty good deal. You name a strategy. I mean, this is a $500, okay, product. It is the beast, okay. And again, I don't mind showing you. I've got some short positions in here. Right? I'm short some Caterpillar, a couple hundred shares of Apple, and a partridge in a pear tree over here, and that's fine. But again, we do and will, okay, be capable of using a couple of indicators, which is fine. Right? So we can, this is why we should short the Russell. By the way, somebody was asking me earlier, and I promised I would share this. What's possible in the extreme? I'll tell you what's possible in the extreme. This, okay, this happens to be my 5-day net liquidating value, okay, from Thinkorswim. And this is back in February of this year. It's February, okay? And when I say a 5-day net liquidating value, I could not think of a more accurate way to display, okay, my account value than to actually take you through sequentially a 5-day window, okay? Here's a 5-day window. Now, this is an IRA. Back in February of this year, February 23rd, I was at $211,000 and change, okay? By literally the end of that week, literally the end of this week, I was actually up to $248,000. Okay. Then I actually jumped forward a month to March where I was at 305. That week was squat. I jumped to basically 308 that week. Okay. This is actually by what? Late July. In July, I was from 392. Okay. Up to what? 392. That was a squat week. I didn't do anything that particular week. Okay. Again, I felt this was probably the best way to delineate what the account does. Okay. Then we actually jump forward to 2 consecutive weeks. Again, if you want to see what trading looks like, this is actually 2 consecutive weeks inside of October. Okay. And I'm actually going to show you the specific trades, okay, that I generated some of the P&L with. Again, this is $538,000 up to about 550. Okay. This is also, like you can see, this is a weekend. I apologize. This is a Friday, a Saturday, a Sunday. This is a Monday. This is a Tuesday. And by the way, not every day is an up day. Look, there you go. I lost $6,000 in a day, right? After having a spectacular day. Okay. And then I jump forward to the 24th, 25th, 26th, okay, 27th, and ultimately the 28th. And again, this is just a 2-week stretch and went on a strong 2-week stretch. You want to see how an account value fluctuates. I was at $538,000 just a few weeks ago, and I'm sitting now just below about 600 grand in the account. And again, that's why I wanted to show you the 5-day net liquidating value. Here are a couple of the trades behind it. These are live in-out trade examples. Now, you select your own contract size. You could do anywhere from 1 contract on here, 2 contracts, 10 contracts. I say initially stay small and stay alive, right? This is a Twitter spread. Now, let me show you what this is, okay? Inside of the Thinkorswim platform, it gives you the date, the exact time. There's the date, the exact time, okay? Right over here is the debit I paid. This is to open, this is to close. Opening position and closing position, obviously it's Twitter, the strikes, okay? I opened the position for $1.09, I closed it for $1.44. Every $109 I invested, I got back $144. It's a 32% return. I'm gonna be honest with you, that one is not exactly killing it, okay? This was actually an earnings-based trade, and this earnings trade, frankly, went against me, okay, later in the day. I was able to get out with a 32% return because I had an order already placed in there. The next one is IWM. People, I trade IWM a lot. And I also want to reference something in here that I don't think I mentioned a moment ago. Okay. Everything I'm showing in terms of trades, okay, are recent. This is the oldest trade, September. Okay. September, we were like, oh, it's November right now. So we're 6-7 weeks ago. Everything else now, this is all October. Everything's October into November. This is the IWM. And the IWM, okay, this is a trade where I put on October 6th. I closed it October 30th. Okay, every $88 I invested, I got back 131. It's a 49% return. Okay, so you're like looking for huge, ridiculous returns. This is about consistency. Okay, this is about, picking up nickels and dimes in front of a bulldozer and not getting your head taken off. You realize how volatile the markets have been, right? I mean, we're talking about coming into the period of the election, which is a little bit nerve-wracking, right? So this is an in-out spread in IWM, which is the Russell, okay? The next one is NVIDIA. So NVIDIA, I told you I trade NVIDIA a little bit. Here's one where I actually put on September 30th, took it off October 22nd. Every $245 I invested, I got back 320. It's a 30% return. You're going to start to see some consistency in here. Like, it's unbelievable. If I'm making, the minimum I'm going to make is 30%. Okay, that's pretty much the minimum I'm going to make in one of these. I absolutely can lose from time to time, but the minimum I'm going to make in here is about 30%. Okay, the max can actually vary. This is another IWM spread. This one was actually put on just slightly after the other one. This is October 8th, taken off October 28th. Every $90 I invested, I got back 139. It's a 54% return. Next one, Lululemon. Okay, Lululemon. This is put on September 23rd, taken off October 22nd. Every $120 I invested, I got back 192. Okay, it's a 60% return. I'm going to stop there for a second. And once again, remind everybody, okay, this doesn't have to be a $120 investment. And if you looked at my account statement a moment ago, okay, I'm not doing a $120 investment. Okay? I fire trades in here, but 10 contracts is fine. So it's $1,200 to be able to make, okay, what? $1,920. That ain't bad, especially when you have, 6, 10, 12 other trades on simultaneously. And that's just in-out spreads. And there's other strategies, of course, that I can incorporate in here, but that's just in-out spreads. Next on the list over here, eBay. Okay, eBay in-out spread. This one, okay, again, an earnings-based trade. This was put on October 27th, taken off October 29th. And this one was actually put on for a $97, okay, $97 debit. Every $97 I invested, I got back 193. It's a 99% return. I mean, that's pretty much a home run, okay, around an earnings-based trade. Next one on the docket, the XLF. All right, financials, XLF. Okay, this one recent enough for you. Put this one on again. This is kind of an election-based trade that we put on, expecting the some wild result to move the financials, and it did. This is November 3rd, taken off November 4th. Every $46 I invested, I got back 63. It's a 37% return. Now, the other reason that I brought up this particular trade, it's $46. Anybody and everybody can do this trade. Why not? Trade the XLF. Okay, you trade the XLF. You can actually trade the XLF again and again. You saw me trade what? IWM, the XLF. There's nothing like rocking in here. Okay, Lululemon, Nvidia is a little crazy, right? Last but not least on this one, here's another earnings-based trade in Snap. Okay, Snapchat, put on October 20th, taken off October 21st. Every $91 I invested, I got back $198. It's 118% return, again, in a period. And this one's kind of ironic. I don't think I intentionally did this, but here you go. It's put on at 10:30, taken off at 10:38. Almost down to the minute, people. Okay, listen, these are spreads. I'm telling you, you want to learn how to do this stuff. There are some bullish trades in here, right? This one's a bullish trade. It's with calls. This one's bearish. This one's bearish. A lot of bearish trades in here. Okay, I had anticipation before the election coming into here, but these are some trades. And by the way, if you're curious about other trades, okay, listen, I still have a ton of positions in and out spreads on. Okay, I mean, again, as I said, I constantly put positions on, right? Stuff that's profitable. And again, you can see I've got one here in Moo, okay, right now. So in Micron, but these are the kind of returns. Again, you want to hit singles, you want to hit doubles, and occasionally, okay, you're going to hit one out of the park, like in Snapchat. Listen, what better time? Learn a skill set that can just last a lifetime. Okay, when are you ever going to have time like this again? And that goes to the fact that some people are back in quarantine, right? I hope that everybody, if you are trapped at home for periods of time, it's a great way to emerge stronger, okay, and hopefully in better financial shape, okay? But if you're still working, you do this really part-time, that's okay too. I don't think everybody is necessarily, trapped at home right now, but I think that generally speaking, most of us have more time in front of the screen now than we probably have ever been afforded to in years. Okay, I know I am. I mean, I'm trapped on an island with a wife and 3 kids. Listen, what our members are saying. Daniel Fabian, hey guys, new member here. Been lurking the chat for about a month. Was short the SPY. TheoTrade, the only membership, okay, that I've ever had that pays for itself and then some. Brent W, you won't find a more supportive and more profitable room anywhere in the retail business. Okay. Ali said, Don, help me pay for 1 year of TheoTrade subscription with QQQ. You have to recognize that every single position that I talked about here this evening, every single position, okay, I present live. And as I said, okay, I'm constantly, I display everything. As I said, you want to see what we did today? Okay, here you go. I'm up 4 grand, and it's still bouncing around a little bit. I mean, I've got futures contracts. I've got a bunch of here. I have a lot of positions. Okay. I don't want you to think that I don't have a lot of positions. I do have a lot of positions. I have an IRA in here that's about $600,000. Okay. I have another account that's close to $600,000. It's about $1.2 million. Okay. In size in here. Right now, though, my margin's only about $91,000. Not crazy. Okay. But again, all of these trades are done live. If you don't have a huge amount of time, it's not a problem. Again, all the stuff is done live, and the trade results, okay, are perfect for part-timers. But you can use what we term set and forget order types. That this stuff, you don't have to sit in front of the screen all day. You actually use GTC orders. I don't use stops. Okay, I don't use them. And again, I told you I wouldn't like rip on stops, but I don't use them. Okay, but I will use GTC. I will use GTC orders. In fact, that's good till canceled order. And if you saw my account a moment ago, as I said, full disclosure here, okay, here's working orders. GTC, 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 GTC. You know what this means? Okay, it means I want out. Okay, I want to get out, and I want to get out alive. And it's a good idea to get out and get out alive that way, because that's just, it's where you want to be. Even a fraction of your time is enough to see some strong results. You don't have to be glued to the screen. The characteristics of the in-out spread. Listen, the attributes of this trade, okay, I think are undeniable. You never have to buy the stock. You define your risk. Risk is limited to precisely your comfort level. You don't use a stop order. You can vary time frames and not pay more. You saw me do trades all the way out to February. Probability of profits high. It's a perfect spread to reduce risk of a stock portfolio because you don't have to go out there and physically buy more stock. It's also an excellent tool for seeking returns to build a smaller account, right? Building the in-out spread. Listen, this is the part of the time where I say, don't let the options intimidate you, okay? Listen, it'll take us a couple of hours to get people ramped up to understand options to the point where they can do in-out spreads, but the spread below is being done for a dollar debit. But the spread is also, okay, I say this all the time, and this is an analogy I've used for years, okay? A spread is like a massive, okay, power saw. If you know how to use a power saw, okay, you could probably build a house a lot faster. If you do not know how to use that power saw, you could probably lop off a couple of fingers. Options are going to be the exact same thing. Options can be the quickest, the fastest, the safest, the easiest way to get where you want to go in the markets. But if you don't know options, okay, that's where you get in trouble. That's where, if used incorrectly, you can lop off a couple of fingers. Listen, every one of you can do in-out spreads. You can do in-out spreads. Maybe you have no options experience, limited experience placing option trades. Again, don't let that part intimidate you. You're going to need these strategies for the foreseeable market future. And you know what? I want to stress something for a second. When I say you need these strategies, like I'm not trying to be facetious. You have markets right now. You just think about this for a second. I'm not trying to scare you in any way. You have markets at all-time highs. Predicated on what? Bailouts, okay? The Fed just pushing more capital into the market. All it's going to take, okay? All it's going to take is what? We didn't get the fiscal stimulus that we needed, okay? Jerome Powell wasn't there when I needed him, okay? He's not going to hold my hand. I'm telling you right now, you want to use this instead of stock. I'm not telling you bail out of the market, not at all. I'm telling you engage. This is the time, people. Volatility is now, and you want to be in volatility. But I am saying to you, okay, you really want to hold a couple hundred shares of Apple right now? Yeah, I don't care about the dividends and stuff like that. You think about the risk reward. You want to go out there and buy, some of these stocks at prices they've never been to before in a marketplace that could do anything in 2021. Listen, we can show you how and when to place in-out spreads in a matter of hours. What we do here is we create detailed recipes for every strategy, including in-out spreads. And I say this, you wouldn't bake a cake without a recipe, so why trade without one? But when I talk about like recipes, okay, people don't really get it. I don't understand when I say, you need a recipe to be able to build these trades. You need some type of guidance to be able to get in this thing, but more appropriately, then you need guidance to be able to get out of it, right? Listen, this is what you need to know to successfully enter and exit in-out spreads. What underlying stocks or indices make the best in-out spread candidates? Like, where do you go for this? You saw me. I did IWM. I did Lulu. Okay, I did the financials, which is the XLF. I sometimes trade the energy sector. Okay, but you need to know that Too much volatility, it's not a good thing. So what volatility should I seek out? You know what you didn't see on my list? You didn't see me. You didn't see me talking about Tesla. You didn't see me talking about some wild child like Plug. You didn't see me talking about, some like, Neo. You didn't see me talk. I mean, I can go through 50 different stocks you didn't see me talking about because there's just too much volatility. And that's not going to be a good thing for you. So you have to have the right volatility. You have to have the right candidate. What options expiration do I select? I know this sounds kind of crazy, but have you seen lately how many options are on options? Take a look at NVIDIA. 3 days and 10 days and 17 days and 24 days and 31 days and 37 days and 44 days. Oh my! There's a lot of options on them there options. You know what? That's nothing. Has anybody here ever looked at the SPX? The mother of all products. Take a look at the SPX. Okay, look how many things, look at this. There's 8, 10, 13, set, hut, hike. I mean, it's crazy how many options they've listed on these things. There's quarterlies, there's weeklies, there's dailies. Okay, there really are dailies because they have Monday, Wednesday, and Friday expiration now. Okay, there's a lot of expirations. You have to know precisely what expiration to select. What should be the delta of the option I buy? You got to know the delta. What is delta? The rate of change of the option for every dollar move in the stock. What are the options that I sell against it? Remember, we're buying one option, selling another option. You need to know how to actually go around and do what's called an in-out. One strike in the money, another strike out of the money. How far in, how far out? Where do I go? How do I actually build the trade? Literally click by click. How do I go in here and how do I physically build the trade? Do I need a large amount of capital in my account to do this? Clearly, the answer is no. Okay, $2,000 is the minimum. You do have to have $2,000 IRAs. Okay, you can do this in a retirement account. Obviously, you can do this in a taxable account. There are brokerage firms. There are brokerage firms that will allow you to do this in a cash account. Okay, what's the right amount of risk for me? We can actually help you in fine tuning how much risk maybe you should be taking in here. Okay, what are the percentage returns supposed to be? You saw some of my trades that were 30%. Other ones, I had 118% on the Snapchat trade. What are they supposed to be? You got to zero in on this. Let me show you what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay. And what a recipe in trading is, well, I mean, listen, for the most part, trading, it's all about answering the what ifs. What might be a good stock or ETF candidate for in and out spread? What's the correct options expiration cycle to buy my in and out spread? How much capital do I commit to in and out spreads? What strike price options do I buy and sell? How many? In growing a small account, what should my allocation be? We have your answers. We build recipes with definitive criteria, checklists for each strategy and each unique variable you're going to encounter. And this is where, for a second, when you look at this, okay, checklist. What do I mean by checklist? Okay. Literally, we go through a checklist. Step 1, identifying a candidate. Step 2, like the expiration. Step 3, liquidity in here. Step 4, somebody was asking about directional bias. Okay. Step 5, what's the right volatility? We give you every single variable you're going to need to be able to get into this. When I talk about checklist, this is modeled after a pre-flight checklist. Okay, it's modeled after literally, I flew around the entire world for like 15 years. And, you hop into an airplane, and I traveled so much that I sat very close up front. Most of the time got bumped up for free to first class. And I can't tell you how many times a plane would be running late. I'd be running late, and, the cockpit door is still open. The pilot gets in there late because they were tied up on another flight. And you can actually see them going through their checklist. We're like, come on, man, I'm going to be late getting home. Just skip the checklist. Just get me in the air. But you're like, no, you should probably take your time, go through the checklist. Okay, that's what this criteria, that's what the logic of like TheoTrade just takes you through each variable. And we go check, 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 check. We even then build a Cliff Note version of it for once you actually understand it, you still go through the checklist. Okay. And then once you get into the checklist and like once you've actually gone through and enter the trade, then we go through variables. What if the stock goes up? What if the stock goes down? Okay. What do I do if expiration is coming? What if? That is what we do here at TheoTrade. Okay. Anybody can build a spread. You got to actually understand variables. What if it go up? What if it go down? Listen, trading, okay, is all about answering your questions, and that's what we try to do here at TheoTrade. We'll give you the right probability. How many option contracts for the account size? When do I close my in-out spread? What if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Can I fix a losing trade? It's about how, it's about when, it's about why, it's about what price. It's just the beginning. That's seriously, it's just the beginning of the variables that you're going to face while buying an in-out spread. Listen, you can read what a spread is. Maybe you even how to build a spread, okay? But you need TheoTrade's recipe for success. I have 20 years trading experience, but I had access to client order flow for 15 years. That's just me, okay? We have an entire group of instructors here. There are 7 other full-time instructors outside of myself. We've viewed and studied millions of trading accounts. A lot of us actually do come from Thinkorswim and TD Ameritrade. I ran education for 15 years at a firm with the largest options order flow in the industry. We've seen everything. Okay, not only do we know what the criteria should be, we know how to build and structure the courses, okay, to give you the highest probability in these trades. Listen, criteria is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We spent literally this strategy, there's years into it, just years into it to fine tune it, to get the right trade set up, to get the right criteria. And when you approach the section on criteria, you follow the steps to build a trade. We have a full-blown 4-hour course. It's ready for you. It's called Guide to Small Account Growth with In-Out Spreads. Again, it's a 4-hour class. It's available immediately with 24/7 access. The class slide deck that provides entry and exit criteria, the checklist, is available immediately this evening for download. The course is archived 24/7. By the way, you can download our classes onto your mobile devices. You don't have to watch this on a mobile device. You can do it on an iPad, you can do it on a phone, you could do this on a computer, any device that you want. Okay. But if you have the capability, you can go, we have a full, iPad app, we have an, Android app. You can download that and you can watch it even when you're offline. Okay. The class is $497. We have an incredible incentive for you this evening. And I tell you that right off the bat, because I want everybody to know before I go any further tonight, I'm going to talk a little bit momentarily about the class curriculum. Okay. But before I get there, I want you guys to understand something. We here at TheoTrade, we are not here to sell you another class for $500 because we've seen it before. Listen, okay. I started working for Thinkorswim all the way back in like 2001. And I built their education division. I've seen everything that's out there. Literally, you name, okay, some stock market education. And I know that a lot of you guys that come out here tonight, you've seen everything. You guys tune in different webinars and so forth. Okay, you will not find anything, okay, anywhere near the level of quality and education that you get here at TheoTrade. Okay, but the point that I want to make before I go any further, we do not sell individual courses anymore here at TheoTrade. Okay, what most people do, they charge you $500 for a class, right? Then you have to pay $500 for an indicator. Then you have to pay $500 to take a class to learn how to use the indicator. Before you know it, they have another class for $500, and they have another indicator for $500. Okay, you're $3,000, $4,000, $5,000 deep before you know it. It's just absolutely ridiculous. And I'm just going to let the cat out of the bag right now and tell you this. Okay, here at TheoTrade, okay, as I said, we're going to give you an incredible incentive to enroll tonight for this. But we do everything, okay, to support you. We don't give you a class for $500 and give you a pat on the back and say, get out of here and make some money, okay? We'll support you in every way, shape, or form. We will text trades out to you, okay? We will give you a chat room to communicate with us. We will give you our email addresses to communicate with us, to bounce trade ideas off of us, okay? We will give you everything that you need to succeed in this business, bar none. We don't stop at anything. And that's exactly what I'm going to show in just a moment here, okay? Hang with me for a second. This is the class curriculum, the small account in-out spreads. Some key points. When I say the class curriculum, this is what the in-out spreads course has in it, okay? Learn to construct in-out spreads. Easy to learn, easy to place, okay? How to buy long duration options without paying more. Give yourself the gift of time. How to use defined risk versus reward strategies so you never have to lose sleep over your positions again. Okay, I put a lot into that. Number 4, in-out spreads are used in any market condition. Volatility, though, They're exemplary in volatility. Build your own in-out spread with detailed step-by-step entry and exit criteria. Okay, in-out spreads are easily managed with GTC, good till canceled, or what we term set and forget order types. In-out spreads can be done with a trading account of as little as $2,000. Trades can be done in retirement accounts, minimal options experience, smaller accounts looking for large upside potential. Okay, and we've now added an entire capital allocation, which is position sizing section to this with techniques to grow your account. Listen, never forget, follow the recipe to be able to build a trade. On top, okay, of the course curriculum, we also now do weekly, weekly videos for in-out spreads. But I'm going to cut to the chase. You want a bonus. Listen, TheoTrade goes beyond one class or one indicator. Like we understand, as I said, I've been around the education industry for a long time. You want everything to trade and invest. You want it at one place and one price. The first bonus this evening, okay, we give you access to our entire library of classes tonight, today, now. It's 97 trading classes. And we do this simply because, people have this fear. Again, they have this fear. You pay $500 and all of a sudden there's another class you have to take for $500, another class for $500. You realize we give you the guide to small account growth with in-out spreads. We also give you what? Guide to surviving and thriving in extreme volatility back spreads course. Okay, black book spreads, how to collect income being short, next big, this is the risk twist spread class, right? Guide to selling high probability spreads, iron condors, day trading NASDAQ futures. Yeah, we have day traders here as well. Covered calls, okay? Maybe mom and pop want to learn just to go out and sell the covered calls. Essential skills for consistency in trading, top 10 skills in growing a small account. People, there's 97 courses in here. Those 97 courses, it's not just me. Like, I don't want you guys to think like, oh, this is the Don show, because it's not just the Don show, right? Again, we have 7 other instructors in here, okay? And just to give you an idea of some smattering of the classes, listen, option strategy classes, option newbie classes, technical analysis classes, day trading classes. Everything's like broken down in different genres. You click on like option strategy classes. You want to see what that looks like? Sell premium, minimize risk, iron condors. Okay, weekly options trading advantage. All right, here's how to collect income being short, in-out spreads. It goes on and on and on and on. Maximum returns with infinity spreads. All of this is given to you this evening. Okay, this is just the option courses. And I know some people look at this and go, it's totally overwhelming. Where do I start? How about this? We have a start here menu. Start here, options 101, options 201. Okay, everybody has to start somewhere. It's access to over $9,000 in classes alone. We're not even close to done yet with bonuses. So just hang with me for a second, because the 97 trading classes is good. Okay, that you get everything here. By the way, that's 97 classes is everything we've done since the inception of TheoTrade, which we started January of 2016. Remember, I only left TD Ameritrade in 2015. Okay, access to over 97 trading classes. Here are the TheoTrade instructors. Remember, 97 trading classes, I didn't do that myself. Okay, we brought in experts in each genre of trade. First on the list, Jeff Bierman. Jeff Bierman is also Professor Bierman, who moonlights with us here at TheoTrade. We call him Professor Bierman simply because he's a professor of finance, now actually teaching in the master's program at Loyola in Chicago. So Jeff is an analyst trader. He's also the former chief market technician for TD Ameritrade. If you've ever been on the Thinkorswim charts, okay, Jeff actually created over half the studies, literally over half the studies in the Thinkorswim charts. Okay, Jeff is also, not only is a professor, he's also a CMT. In fact, he's a CMT. Corey Rosenblum is a CMT. Brandon Chapman is a CMT. We have 3 CMTs on staff. So if you're wondering like, hey, I need to know a little bit about charts, Don, you didn't mention about charts. I'm not your chart guy, okay? I'm the options quantitative trader here. I'm your geek, all right? We've got, plenty of other people for charts. Next in the docket, Matt Williamson. Matt, okay, is a market neutral premium selling option strategist. What's Matt's claim to fame? Spreadsheets. He's an options geek. If you're an engineer, you're absolutely going to love this guy. You're going to love him, I'm telling you, because he is meticulous, okay, in going through and finding edge for premium selling. Next in the docket, Corey Rosenblum. He's our senior strategist and resident swing trader. You want to get in, you want to get out, you want to get on with your life. Swing trading fits beautifully, though, with in-out spreads. Corey also produces, okay, a daily column, and it's called Corey's Corner. Okay, and you'll have access to that as well. You have access to everything that we do. Next in the list over here, Brandon Chapman. Okay, Brandon also worked with us at TD Ameritrade. Here's Brandon's claim to fame. Brandon actually wrote the education course materials for TD Ameritrade. One course in particular that he wrote was an 18 month-long course that cost over $24,000. Okay, I'll put money on it. Okay, I'll put money on it that somebody probably took this particular course, paid $24,000 for it. Okay, and that, people, is what we do here. Just blows away what Brandon put together, years ago. And believe me, we're not $24,000 for it. Next in the docket, Steve Slim Miller. Slim, I've known Slim actually since I'm a kid. He's a 43-year veteran stock options and futures trader. Actually started trading in the mid 1970s. Slim is also kind of our resident psychologist here, but he's also into cyclical trading. Okay, next in the docket, Tony Rago, NASDAQ futures. Okay, an intraday strategist. All Tony does all day long, he just trades one product. Okay, one product. That's it. Now you get access to Tony, you get access to Blake, you get access to Steve, you get access to everything. Okay, you have to find the area maybe that entices you. Everybody has, a certain personality. And this is where people go, I just want one strategy and one thing that works. You have to find something that's going to fit for you. That's one of the things we learned at TD Ameritrade. You can't fit, the round peg in this, in the square hole over there. NASDAQ futures intraday strategist. That might not be for you, because this is intensive. You're going to sit there all day long and trade with Tony if you want to do that. Corey Rosenblum is much more hands-off. Okay, Matt Williamson, Matt just sells stuff. Okay, and watches like the grass grow. That's it. Next in the docket here, and last but definitely not least, we just brought on Blake Young. Blake also comes from Thinkorswim and TD Ameritrade. His expertise is market profile. We've been looking forever for somebody from market profile. Futures, he's a currency trader and commodity trader. You're absolutely going to love the crew that we have here. Of course, then there's myself on top of this. There's 8 full-time instructors here at TheoTrade. Bonus number 2, we give you, an all-access TheoTrade VIP membership pass free. What this basically is, it's 3 months unlimited access to TheoStream, which is everything that we do. All right, it's live trading chat room. We broadcast a minimum of 6 hours a day. Okay, we do real-time trade ideas, real-time market insights. I kick off the trading sessions. When I say I kick off the trading sessions, I go live 10 minutes before the bell. I stay with you for about an hour and 20 minutes every single day, and I trade. And then after me comes on Professor Bierman, and after that is usually Blake, and after that is Matt, and then Tony, and then Corey, and Brandon. Oh my, We also text the trades out and do push notification, including, of course, in-out spreads. So if you say, you know what, I just want to learn in-out spreads because I love the idea that you presented tonight, good, you got access to it. But I promise you, you'll get good at this strategy, and you'll kind of want to forge out maybe a little bit further, spread your wings a little bit. We have 5 unique trading portfolios. We have duration portfolios and kind of in-out spreads. We do infinity spreads. We also have daily coaching sessions with timely topics. When we say coaching sessions, this is continued education. Jeff Bierman, this is what he does. That's why we brought in a professor of finance. By the way, professor of finance, it's $42,000 a year to see Jeff over at Loyola or here at TheoTrade. Instructors also will directly answer your trade questions via email. If there's one thing, in the second bonus that I put a huge amount of weight into, it's right here, We are the only firm that I know of. We don't charge, a couple of $1,000 here or there so that you can email us. You can email us and bounce specific trade-related questions. Can I do this trade? Did I build this right? Am I doing this? You don't have to write us and so I have this friend and it's a hypothetical trade. Hit us with questions on email. We'll get back to you. We'll answer you. It's access to another $1,000. least in support trades and insight. Okay, here, what our members are saying. Ken said, woohoo, thank you, Dom. Okay, I'm never sure there are trades that are new to me that I structure myself. This is great to hear. Not to brag, but this is due to you and your magnificent team. I'm up 1.67 million in profit. Yes, I'm going to pull a big hunk of this out, mine and my wife's account. Plus, I'm going to give my granddaughter $50,000 to work with in her master's degree, thanks to all of you. I'll let you know how the trade goes. Okay, thanks again, the blank family. I didn't want to put the name in there. In addition to this, you get 59 proprietary indicators and scans. As I told you, okay, early tonight, promised everybody we will give you momentarily the auto expected move indicator. Again, we give you the auto expected move indicator because we use it all the time. We'll give you gravity points, okay? TheoTrade RSI, Quantix. I use Quantix every day, all throughout the course of the day. We have a next generation squeeze, NQ levels, specifically for Tony Rago, complex position tracker, SPX expected move. That's just a smattering. There are 59 proprietary indicators and scans. This is the stuff that people get nickeled and dimed for at every education firm out there. Okay, people, listen, TheoTrade, we include everything. Everything you're going to need to invest and everything you're going to need to trade. And if you're looking at it right now, you're like, oh, again, that's totally overwhelming, right? And I reiterate to you, I think you'd rather be overwhelmed rather than underwhelmed. And again, you will kind of, forge out to other classes after you master certain aspects of this. When we do classes and coaching and email access to the instructors, there's a live trading chat room, live trades, indicators and scans, mobile access. It's everything you're going to need to succeed. We literally built TheoTrade's the Netflix for traders, every genre of trade. Tonight, it's $297 for 3 months. And I want to clarify something because I can already feel the questions coming in over here. Ready? Okay. This is not a membership. It is not a membership. It is a one-time $297 charge for 3 months. After 3 months, you're going to say, I want to do it again. Good. After 3 months, it's $297. If you want to do it again after that, it's $297. It's not an introductory price. It's not a membership. We don't have you sign anything. We don't like memberships. When I say we, okay, you go to a gym, you try to get out of the gym membership. 6 years later, they're still charging you $100 a month. We don't do that. It's $297 for 3 months. Okay, we hope you love us. Listen, it includes the high probability in-out spreads class. The archive is available immediately. It gives you access to over 97 other trading classes, all available immediately on demand. We didn't even discuss this. There are new monthly classes. You have access for 3 months. In the 3-month period, I don't think we get 97 classes. We give you access to new classes, okay? Live trading chat room. We provide real-time trade ideas, real-time market insights, and we broadcast a minimum of 6 hours a day. 59 proprietary indicators and scans. Text and push notification. Text and push notification to trade ideas to 5 separate portfolios. Daily coaching sessions, timely topics and stocks, options, and futures. And, okay, we'll answer your questions via email. I'm going to tell you right now, it's worth $300 just to be able to email us. Okay, try it. Email. Okay, you sign up tonight. Go to support@theotrade.com, shoot in an email. You'll get an answer. Okay, by midday tomorrow, you'll have an answer. Go right now to theotrade.com/IN. theotrade.com/in. All right. So one last aspect to this. We'll make it a completely riskless deal tonight. It's a little bit of pressure on people. It's a money back guarantee. Trade with us. Trade with us over the next 3 months. If you're not completely satisfied, just email support@theotrade.com. Provide us the details of your trades, receive a full refund. By the way, this satisfied over here, we do not identify what the word satisfied means, okay? The only stipulations, you got to trade live. You got to do 10 trades in the next 3 months. The reason we do this, okay, it's $297, okay? For $297, if you're not satisfied, please, we will more than happy to hand you your money back. But you do have to trade. And I'll tell you why you have to trade, because we don't want these types of people that come here that just basically watch a couple of classes for free and just go, give me my money back. If you're willing to actually trade with us, right, your initial account value has to be $2,000, and it has to be, by the way, I'm not even going to limit you to in-out spreads. Any, okay, use any of our criteria for any of the 97 classes that we offer. You have to provide real account statements. Okay, this ain't paper trading, people, and we'll give you 297 bucks back. But again, if you're not satisfied after 3 months, okay, it's fine. And we go on, unbelievable runs with trade, and some of the times, trades can go a little bit flat. It's fine. Okay, like we get it. There are 6,000 plus people now on TheoTrade. Why? There's no pressure here. 297 bucks. You want to do it? It's fantastic. Actually, somebody just chatted in, a moment ago. They're like, oh yeah, it's they were actually a member a couple of years ago, took a little bit of a hiatus and comes back. Everybody comes back. It's 297 bucks for 3 months. Okay, what's not to love? 97 classes now with all the support in the world. I mean, literally, if you just emailed us from time to time to bounce ideas, you basically have somebody to hold your hand to get you in and out of positions. Again, TheoTrade.com/in. Listen, get into TheoTrade now. We're going to work with you directly. There are 30 riskless spots, okay, on this deal tonight. And what that basically means, there are 30 TheoTrade riskless trade spots available. Why do we only do 30? Well, obviously to create a little bit of an incentive for you to enroll this evening. But the other thing is, I have to actually reconcile 10 trades from 30 different people, okay? That, we're also giving unlimited email mentoring. Listen, send us your trades. It's $297 riskless offer. Has never been available before with this in-out spreads course. Okay, it's never been available before with this particular in-out spreads course. And I stress that we will give you 30 spots this evening. Okay, TheoTrade access today that you get for $297. Again, go to TheoTrade.com/IM. I'll go through everything again, answer a couple of questions here momentarily, and we'll eventually wrap some things up. By the way, here's TheoTrade.com/IN. I want to make sure everybody sees it. Okay, TheoTrade.com/IN. Again, it's the guide to small account growth. Okay, with in-out spreads. Make sure we actually see this page a little bit. And I'm going to answer some questions. I'm actually I'm reading some of the Q&A right now to make sure everybody's good to go. Oh, those of you that are enrolling, because one of them somebody just actually popped this question in, TheoTrade.com/IM. Okay, for those of you enrolling, when you click add to cart, you click add to cart over here, and this pops up on the billing information. Okay, I suggest that you put your phone number in. The reason is if you want to get the text messages, okay, it doesn't say this right on here, but I'm telling you right now, this is what will immediately get you text messages when we fire out trades. The other aspect I want to make very, very apparent on this particular page as you scroll down, it's $297, okay? See where it says single payment. This is not reoccurring. Okay, actually, you could also do 2 payments of $149. That's up to you. But I just wanted to reiterate that it's a single payment, okay? Single payment of the $297, that it's not a membership. And I always reiterate that time and again, we don't do memberships anymore. We moved away from it because, quite frankly, again, we think people don't love that. By the way, after you enroll, it takes me 4 or 5 minutes. I'm going to answer some questions. It takes me 4 or 5 minutes to see if you have enrolled. Okay, I will read off the names of those of you that have enrolled, okay, and will receive what we kind of call the riskless trade, which is we'll just give you a money back guarantee. Again, it's 297 bucks. You're not going wrong here for 297 bucks. Again, even if you shared a couple of emails with me. So it's TheoTrade.com/IM. Again, just click add to cart. The other aspect on this particular page, for those of you that waited patiently, the auto expected move indicator, okay, is located directly on this page. The auto expected move indicator is located directly on this page. Okay, as those of you are enrolling, if you're enrolling right now, you need not download that particular indicator. We have it on our site. Don't panic. Okay, it's on our site, and we have all the indicators, of course, listed on our site. In fact, I'm actually going to take you over to TheoTrade for just a moment. For those of you that are enrolling, fantastic. I'm actually going to show you a little bit around TheoTrade. This is the TheoTrade. Okay, this is actually our members area where we're obviously off air at this particular time, but this is where we broadcast, and down below is the chat room. Okay, so we have over 6,000 clientele. This is one of the most active chat rooms in the entire industry, okay, bar none. So you can ask questions in here. All the instructors, like myself, okay, if you look, I'm actually highlighted. It says hello. So you can actually see our posts, okay, very, very differently from obviously some of the client posts in here. So if you want to be able to pull out specifics. All right, next I want to show you on the list over here, the Start Here menu. Now, I kind of mentioned this a little bit earlier, but I want to reiterate something. Options 101, options 201. That's not necessarily for everybody, but even the most experienced of experienced traders are going to get something out of this. I suggest every one of you watch Order Execution Part 1, 2, and 3. This is really going to open up your eyes, okay, to the world. After 15 years in the brokerage industry, I will show you everything in these 3 segments, okay, about literally how your order is executed, but more appropriately, how to get filled at better prices. Because that's what that one really comes down to. I say get filled at better prices, literally to execute pennies better. And it differentiates for stock, for options, and for futures. We give you a crash course in option geeks, okay? Getting your risk under wraps. There's so much in here, like, you're like, oh, it's kind of novice stuff. Believe me, okay? This is novice to the absolute extremes of the marketplace, all right? So obviously this is the class archive. As I was saying this again a little bit earlier, we have classes on futures, bonds, hedging strategies, trend trading. Somebody said, do you guys get into charts? We have an entire technical analysis archive. This is second to none. There is actually just as many technical analysis classes as there are options classes. Price retracement, Fibonacci's, right? DMI class, okay? Market strength, oscillators, volatility indicators, Ichimoku trading systems, okay? Then all of this, you click on member home, is searchable. You can actually search. We built like a little Google search engine into our own site, okay? It's all available, again, immediately this evening. All right, I want to jump back and answer a couple of more questions. Again, somebody popped in here. It's theotrade.com/IN. Again, theotrade.com/IN. All right, let me move on to a couple points and some generalized questions in here. Oh, this comes from Steve. This is September 23rd. It's really recent. Your organization continues to blow me away. Insights, expertise, resources, personality, and structure. I've learned so much and have been able to apply the knowledge to improve my trading exponentially. Okay. Thank you. And thanks to your staff for everything. I'm grateful I found TheoTrade and grateful I had the sense to choose your organization as my mentor, okay, over these other players in the marketplace. And now you've added Blake Young. Blake is actually one of our newest instructors here, whose style I enjoy immensely. I'm starting to adopt. Okay, don't know what else to say except that TheoTrade is awesome. Okay, this is a very satisfied customer, Steve in Southern California. Again, as I say, it's theotrade.com/IN. This one actually comes from Todd Summerall, and then I'm going to answer these general questions. And this is probably one of my favorite emails ever. It says, don't know if you remember, okay, but I emailed you a few weeks ago, and you told me my delta was positive a couple thousand or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just wanted to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay, you can use this if you want, and I will, Todd. So it's from Todd Summerall. The reason I mentioned this particular email is with the you can email us, okay? And we will actually say like, hey, listen, we worked in the brokerage industry. We know what's right and what's wrong and what we can say to clientele and what we can't. And this individual, like I looked at his account for about 2 seconds and I'm like, oh my gosh, if he doesn't get rid of this position, he's done. He's done. He's going to lose everything. And I wrote that back to him in 2 seconds. He smashed the entire position and ended up obviously sending us a great email on that front. All right, let me answer some general questions, and then I'm going to get really specific on you guys. Again, I'm also going to read off some of the names that are coming into the chat right now. So let me go on. By the way, I like one of the ones that just came on. So Ted said, isn't this strategy directional? Do you have to be right on the direction? Okay, the answer is it is a directional strategy, but it actually plays more into probability. But Ted, We also have a variation of this particular strategy that doesn't have a directional component to it. So that's something called gamma iron condors. All right, onward and upward over here. You need a laptop. So some general questions, right? What do you need to really get started here? You need a laptop, internet connection. In fact, you don't even need a laptop anymore. You could probably do this on an iPad, Android, even off like a phone because you can trade off of it. And we have a mobile app. We have everything you're going to need to get started from absolute novice to the most extreme traders. The next one over here. This is not a membership. I'm reiterating that again. We do not auto renew. We will not bill you again. Okay. Number 3, each week we do a weekly video. It's done on Friday. We have an in-out spread video. Okay. It'll update you on every move. Even though we text out trades and send out the trades, this video is about a 10-minute video every week, and it gives you insight. Why did I get into this trade? Why am I getting out of this trade? Why am I, adjusting this here? Okay, every insight. And that's what some people need because it doesn't just give you like, oh, I'm not spoon feeding your trades. It gives you the insights to be able to do this on your own longer term. Okay. Number 4, TheoTrade archives everything. We understand that not everybody can watch throughout the trading day. Listen, we do 6 hours a day. Can you watch 6 hours a day? Maybe. You don't have to watch 6 hours a day, but if you want to watch 6 hours a day, you can. But we record everything. If you want to just tune into my morning sessions, fine. You know what's cool? If you have TheoTrade mobile, okay, you can actually replay the sessions at like 2 times the speed. I sound like a chipmunk, but I'm just, mentioning this because we archive everything. If you can't see something live, every single word spoken on TheoTrade is archived. Number 6, add your cell phone number when you're enrolling. I already mentioned this, but add your cell phone number. You're going to receive trade ideas via text message, and you want to download TheoTrade Mobile, okay, for push notifications. Number 7, email us anytime. Receive a response within 24 hours, including trade-related questions. By the way, you have to give us 24 hours because the other day I actually had somebody and it was like 10 minutes to go to the close on a Friday. It was like, I'm panicking. I need this position to be closed. And I'm like, you're fine, man. Just let it go. Like we actually will watch the email. We will watch the email queue typically on Fridays, but please give us 24 hours, okay? And you can ask trade-related questions. Number 8, you gain access to every single course. Everything we've done in the previous 4 years, about to be 5 years, okay, including classes and coaching and live trading sessions. Everything is searchable. Name a trade topic. Name anything involving trading topics. We have an archive on it. Okay. And that's why I said you can go out there, you can spend $20,000, $30,000. You will find nothing comparable to what we do here at TheoTrade. We charge $297. People, there's a reason we have 6,000 members on TheoTrade now. Okay. Number 9, all the trades that we discuss can be done inside of an IRA. I'm hardcore about this. I know retirement accounts. I know a lot about margin, so forth. I make sure that everything we can do can be done in an IRA or retirement account with as little as $2,000 in the account. Number 10, we can help you get approved for options. We at TheoTrade have great relationships with all the major brokers, whether it's, TD Ameritrade, which is now Charles Schwab, E-Trade, which is Morgan Stanley, Tastyworks. We have relationships with them all. Remember, there are 30 riskless spots available this evening, and that is it. Get results, okay? Take action, enroll for TheoTrade now. There's absolutely no risk to you. Go to theotrade.com/IM. And again, I'll read off, okay, a batch of names that's coming through right now for those of you that are enrolled. I also want to just pop this page back up there if there's any further questions on this. I'm going to answer some of your specific questions right now. Again, theotrade.com/IM. As I said a moment ago, takes about 5 minutes for me to see some of the names, okay, of those that have enrolled. Okay, I'll start with this. Debbie B. from New Mexico, Christian L. from California, William C. from Massachusetts, Peter B. from Florida, Richard S. from California, Carl L. from Arkansas, Jonathan A. from California. This is just the first batch. I think there's about 8 names there in this first batch, okay, that have kind of come through. And I thank you guys, obviously, for enrolling. But I just want you to know that obviously you've got the riskless trade on right now, which is it's fantastic. And again, come in and tomorrow morning, like first thing in the morning, before the bell goes off, again, we are live right before the bell goes off. Come in, introduce yourself to everybody. You'll be amazed, like the community. I mean, the TheoTrade community it's a great community. I mean, people just love the some of the other clientele in there, and we've gotten close over the years. All right, let me answer some really specific questions over there. Okay, Melissa. Melissa had a specific question. What parameters do you follow, okay, when you're going to close the trade? Melissa, closing the trade is a function of a percentage return, okay? But it also has quite a bit to do with the expiration. So you could be coming closer to expiration and have to close it, or you're just going to hit a certain percentage return. We are looking in-out spreads. In the generalized in-out spread, we're looking for a very specific percentage return, okay? Once we hit the percentage return, we're out. We're out of the trade over there, and we move on to greener horizons over there. All right, the next one here. By the way, somebody's saying, what percentage, okay, of the premium do you suggest be extrinsic value? So that's a question that is specific to the class. And you're actually going to learn exactly what you should pay for the spread. There's a much easier, instead of looking like, what you should be extrinsic value. I'm going to tell you right now, okay, there is no extrinsic value. Okay, again, I'm going to say that again. There is no extrinsic value in these trades. Extrinsic time value is another word for time value, for those of you that are a little bit newer to this. And the answer is there isn't any time value. So that's a phenomenal question, and the class will actually focus specifically on that. All right. From Alberta, question came in. Do you execute the options together? Absolutely, unequivocally, yes. Okay. Spread trades. When you go out and you're going to trade, okay, in a marketplace like the Spiders or the marketplace like NVIDIA, you're going to go out and do a spread. You absolutely unequivocally place it as a spread, okay? And I'll give you that one right now because the fill will be much, much better. You don't go out and put on one and put on the other, okay? Michael said, do you run the TOS scanner, all right, to time some of the entries? Actually, yeah. So there are some nuances to this class that you will learn in the class, Michael, that will actually detail a specific scan that can be used, all right, for the entry over there. So the answer is absolutely. And yes, you can use the scanner. And yes, we have scans built specifically for the class. Okay. All right. I'm just going here. All right, the next one over here. Oh, you know what? I like this one. This one comes from Harold. He said, I've had some issues doing spreads like this with liquidity far from expiration. Okay. Yeah, so one of the keys that's actually taught, Harold, in the class is about liquidity. And the liquidity, though, has also a lot to do with time frame. So that's actually twofold over there. When I say it's twofold, not only are we going to teach you where the liquidity is, we're also going to teach you where the time frame that you should be using, okay? Because you use the wrong time frame, that's going to bury you really early on. Options, I'm going to just let you know this. Harold, options are predominantly only liquid now, okay, in a very short time window. Everybody now moved to the shortest duration possible, which tells you a huge about the marketplace. Nobody has any feel for where the market's going, a couple of months from now. They're all trading in the shortest duration possible. Okay. All right. Moving on over here from John. What does the auto expected move, okay, do in terms of helping set up the trades? Okay. Auto expected move is a very easy concept of reversion back to the mean. Again, that's another thing that will be conceptually taught in the class. If you were to look at something like auto expected move, and I'm actually going to bring this up here, okay? If you're to look at something like auto expected move, this is a blistering move to the downside in the spiders, followed by a blistering move to the upside, okay? And then again, a wicked pullback after breaking through it. The auto expected moves, breaches of expected moves can be wonderful setups, okay, for these trades. Again, breaches of expected moves can be wonderful setups for the trades. That's all I really wanted to enunciate. I didn't want to go too much further than that, okay, without, I wouldn't say giving away too much. I just don't want to confuse too deeply. We use the auto expected move. Again, I have to say this incessantly here at TheoTrade. It's one of the most effective tools in the here and now, and has been for about now the last almost 3.5 years. By the way, a next batch of names came through. Brad S. from Michigan, Donald L. from Texas, Thane from Arizona, Naran from Illinois, Clifford R. from Colorado, Les H. from Florida, Tammy K. from North Carolina, Kip C. from Texas, Peter G. from Queensland. So Peter, you're actually from Queensland, Australia? Just curious if you're actually from you're an Aussie. I went to college over there, man. Uni. Anyway, thank you guys for enrolling, and I apologize if I butchered anybody's name, because I'm famous for that over here. With that, again, there's a handful of riskless trade spots. I think I've probably read off about, I'm just counting back over here, I've read off about 17 names in total. So we have a couple of riskless trade spots still in here. Jack D from Canada, John T from Ohio. Those just came in, so we're up to about 19 names. We still have a handful again of riskless trade spots available to you. I've answered a ton of the questions. You know what? Let me get this one. Somebody came in and said, how many in-out spreads can you place during a week? I can place a lot, sir. I trade a lot. How many do you want to place during a given week? How you allocate, you'll actually learn this portion of the class too. You don't want to step out and just start firing like a sprinkler head into the marketplace. Very strategically, because you're going to learn about what's called correlation. Put trades on, let the market move. Put trades on, let the market move. Stick and move, right? Lay some capital out, let the market move to another standard deviation. It's actually, you have to have a lot of respect for capital allocation to make this work effectively for you. Listen, I've gone way over in time. I want to thank everybody for tuning in tonight from wherever you joined us around anywhere in the world. Again, we had somebody hopped in from Australia, a couple people from England, a ton of people from the US, Canada. Thanks everybody for joining us tonight here at TheoTrade. Have a wonderful evening. Again, theotrade.com/IM. I hope to see you guys bright and early in the morning here in TheoTrade chat. Have a wonderful evening. Bye-bye.